Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our Monday buys videos. So every week we go over and take a look at the M1 Finance Roth IRA. We take a look at what cash is available within the account, what stocks paid out dividends last week, what stocks we purchased last week, and the overall performance for the week for the M1 Finance Roth IRA. So if you are brand new to the channel, hit that subscribe button below. I do cover the stock market, dividends, real estate, personal finance. If you do enjoy this video, find it helpful, hit that thumbs up. And if you have any comments for yourself, want to drop a question, or just say hello, drop it in that comment section. I always read and reply to your comments, and let's go ahead and get into the video. So last week was a bit of a rough week. We continue to sell off here. We can see the S&P 500 down 1.07, the Dow Jones down 0.69, and the Nasdaq down 2.29. Now overall, on the M1 Finance, let's go back to the week here. For the week, we are down 0.37% here for the week. We did have a few stocks that did pretty positive, up 6%, followed by a bunch of REITs, healthcare, telecom, and utilities. So a lot of these real estate investment trusts, also some of the healthcare sector that had been slammed recently, and some of the utility companies kind of kept the portfolio afloat, whereas some of the harder hit companies down here were oil. We had some pharmacies, some industrials, some technology, so Cisco, Apple, CenturyLink, Stanley Black & Decker, that would be more consumer goods, and Lowe's. Lowe's was hammered down 12.52% just last week alone. So kind of taking a look at the portfolio overall, even with Lowe's dropping more than 12%, about 50 bucks, with Apple also going down 5.31, another 40 bucks right there. Those are some big hitters. The portfolio only managed to lose about 52 bucks and down 0.37%, whereas the rest of the index was down almost double or much more than double. So what sort of activity did we have last week? We did do our Monday buys video. We had a bunch of stocks paying out dividends last week. We had Apple paying out $3.02, Main Street Capital paying out 78 cents. When we had AbbVie paying out $7.65. We put in our whole amount there. We bought up a brand new stock last week, going over CVS. We covered why I added it to the portfolio, a little bit of it, like a brief summary, and then I just targeted the whole $126.83 toward this specific company. Now, we do have some cash sitting in hand. You can see here we have $3.12, and we have the auto invest off. So what dividends were paid out that's sitting here? Well, we have Caterpillar. We have a few Caterpillar here. Looks like Caterpillar. We have one that paid out 86 cents and another here that paid out $2.26. Not sure if they had some sort of a special dividend payout. I don't believe so. But all in all, that totaled $3.12. Now, I do have my allotment kind of going in every week, and this is $115.38, because if you multiply this by 52 weeks in a year, you're going to get very close to $6,000, which is the maximum you can contribute to a Roth IRA. So I'm going to be depositing $115.38, and I have $3.12 sitting in cash. So essentially, I'm going to be adding $118.50 into the market this week, and this is all to dollar cost average. Now, moving back over here to the portfolio and taking a look at what stocks are actually down overall, I can go ahead and zoom in for all of you on those mobile devices. We have a few stocks down here in the in the negative. Now, some of my recently added companies here are Chevron, down about 1%, and CVS also down about 1%. Both of these were just added in here within the last week or two, and they are companies I had wanted to continue to average into them in order to get that equity up into that $500-600 range, where some of my bigger allotments of my equity is held within. So them moving down in the short term is really good for me, because it allows me to continue to buy into these companies just due to the fact that I wanted them added into my portfolio. Chevron allowing me a 1% discount, also CVS. Now, The way that M1 Finance tracks this up front is a little bit different sometimes than what the actual holdings, because M1 Finance likes to include the dividend. So Kellogg's here, for example, this is showing a decrease overall of 4.3%. Let's see if, I don't know why it's kind of locked that up on me. I'm going to go ahead and hit that for refresh, and there it goes. So Kellogg's, okay, it restarted the whole thing. Let's go ahead and go down towards Kellogg's. So Kellogg's here is showing negative 4.3% your return for all of the performance. But if we click on the actual gain here, we can see that overall market gains, we've lost $17.58. M1 Finance puts those earned dividends against my actual loss or gain and actually kind of doesn't show the correct return. Instead, I like to use my spreadsheet for this. So down in Kellogg's section, I can see Kellogg's is actually more closer down to about 4.31 there in that range versus here at 4.3. It's actually about the same. So kind of interesting there. Now, as far as me wanting to pick specific stocks, I do want to continue to buy a little bit more CVS and CVS this upcoming week. We can see here that I believe Chevron has already gone ex-dividend. I'm going to go ahead and load this one up. It should go ex-dividend somewhere in May. Now, a few other of these companies here that I wanted to add into, Kellogg's has been one. I've been wanting to kind of buy a little bit more, but I had time until the end of May because they are going to be going ex-dividend here towards the very end of May. We also have Walgreens. Walgreens has been one I've been averaging into. It's really not down too bad overall, 5%, which is 20 bucks. And that was one I've been just kind of averaging into. We do have a few others down here. We're going to also be going into June here in about a week. Next Saturday, I believe, we're going to be going into June. And we can go ahead and bring those up. And we have Altria. Altria, I'm not sure if I'll be adding any more equity into this one. I believe that position is at a pretty good amount as far as how much equity I've added into this, about 650. So that's about where I want to have that one at. And then we have CenturyLink. That's not really one that is a long-term buy. That's more of just a fun added into the portfolio. Now, CVX here, it's been Thursday, it got slammed. See if I can bring up the performance here for CVX. I should be able to, yeah, CVX. So Chevron here, down for the week, about 1.5%. Again, the portfolio shows about 1%. Thursday got slammed. Oil just overall, if you look at the overall, what's the X, what is the abbreviation there for oil? USO, I believe. Actually, let's go ahead and go back over here. I believe it's USO. See if that's correct. Okay, there it is. So United States Oil Fund, USO, 5-day change down 6.5%. So oil got slammed Thursday opening. Wednesday also went down there about 3%. So overall, when the whole market or the USO is down 6.5%, Chevron's down, many of these other companies that are really closely related to this specific one are also going to be down. As far as we can probably take a look here at Exxon, but BP down around 1.37 and Exxon down about 2.38. So Chevron actually did, pretty well in comparison. This one has already gone ex-dividend, but this is just one I've been wanting to continue averaging in. This one won't go ex-dividend again until August 16th. So if I buy this one and it continues to kind of go down, I have almost 3 months until this one goes ex-dividend again. So I have a lot of time between now and then to kind of buy this one for the dividend, but I also want to buy it just because of the valuation. I believe it's a good value. So this one, I am going to be buying more Chevron just a little bit because I added Chevron and CVS Health Corp, but I added more equity. Oh, actually did add, oh no, okay, that's right. So I need to add about a little, probably dump $40 into this one and 40 bucks into my other one. I'm going to be doing 2 buys. So Kellogg's here is my other one here that I've been wanting to go and take a look at. This one, I've been wanting to buy more of it, but I felt that with the market volatility that we were having, this one would be able to come down. And if I had bought this one just a few weeks ago, let's go in a 1 month performance here. 1 month, I was planning on buying this around this area, but it was just positive in my portfolio. If you look back a couple of weeks, Kellogg's has been positive, positive, positive. So I decided to kind of wait it out, and it has came down over the last 2 weeks. And I feel that this is a good buying opportunity for me, that I can go ahead and begin adding more equity into this specific stock. It is trading with a starting yield currently of almost 4%, 3.96, whereas my buy-in points around 3.79. Chevron is at 4.01. So both of these that I'm going to be adding here on Tuesday are trading at about a 4% yield. We have Cardinal Health here. I don't believe that one's going to extend. This is Walgreens here. Walgreens has already gone ex-dividend. They're going to be paying out here on the 12th, so I should see that one coming in soon. Cardinal Health, this one's going quite a while, ex-dividend at the very end of June. Avery Dennison, this one comes ex-dividend early June. Altria, I'm not planning on adding any more equity into Altria at the current moment. And that is pretty much it. So we're not going to be going over too much information as far as, the main reason I'm going to be buying these two specific stocks, which is Kellogg's and Chevron, is because they are part of my portfolio. I recently added them in. They are with a lower portion of equity to the rest of the portfolio. I'd like to bump that up. So what I'm going to be doing today is I have $118.50 that I'm going to be putting in. I'm going to go ahead and split this up and average into both of these. So that's $59.25 into both of these. So I'm going to go ahead and target my Chevron and go ahead and hit buy, and $59.25, and that's going to go ahead and buy that. And then my other one is Kellogg's here. I'm going to go back to my portfolio, select Kellogg's, which should be negative here, Kellogg's, and I'm going to go ahead and target. I'm not sure if I have any more dividends coming on Monday. If you know me, I like to overshoot, so it's normally $59.25. I'm going to go ahead and just overshoot $65 and go ahead and confirm that, just in case I do have a few dividends arriving in the portfolio on Monday or Tuesday. When the market opens on Tuesday for the very first time, it'll just buy in all of my cash available in hand. My newly deposited capital I'm going to be rolling in on Monday. Plus, if any dividends come in on Monday and Tuesday that I'm not expecting, I'm going to go ahead and use that equity as well towards purchasing more Kellogg's versus Chevron. So that is basically all I wanted to cover in today's video. We covered, the overall 1 week performance of the portfolio. Really not that bad in comparison to the markets. We did have some cash, which is from those dividends that were paid out last week. Kellogg's is going to allow us to just kind of buy and continue to average up as far as it's going to allow us to increase our yield on cost, increase our yield, our dividend payouts, decrease our unit costs, and just overall increase dividends across the portfolio with the upcoming payouts. So that is it for today's video. If you guys did enjoy the video, drop a comment below. Let me know that you enjoy these videos. Hit that thumbs up. If you are brand new to the channel, hit that subscribe button below. Again, I do cover the stock market, dividends, real estate, personal finance. Thank you all for tuning in. I will see you next time. Have a great day. Bye.